Alright, so today is February 5th, 2023, and we're going to be analyzing this chart a little bit differently in comparison to how we do it with the other charts. So in the other charts, I look at an indicator that I have. It's specifically the indicator that we use, and it makes things a lot easier. However, as we all know, there's multiple ways to skin a cat. There's many ways to read a chart. There's not one specific way to do it. There's not one specific indicator that's going to teach you how to trade. In fact, a lot of trading comes down to risk management and to trading psychology. Indicators are merely just a sign as to when you can enter and when you can exit. There are many things that play a role into when to and how to trade. So let's look at this chart. We're looking at the ticker symbol AAPL, which is Apple. Now we're looking at the chart from Friday, February 3rd, and I'm just going to break this chart down. As we can see, just from the look of it, without all of this information on it, without all of these lines as text, just looking at the chart, we can clearly tell that there is an upward moving trend, a bullish trend in the morning, and then around 11 o'clock it levels out, goes into consolidation, drops a little, and stays within the same level throughout the entire day. So if we were to just look at this chart, the majority of the money would be made right here. Now, I'm not saying that you can't make money over here past 11 o'clock. I'm not saying that. You can definitely make money past 11 o'clock, and I'll go into that. But as we can see over here, this is where the profits were made. So how do we know when to jump in? And how do we know that the moment we see this candle stick at 9:30, it's going to be a bullish trend? Well, there are many indicators and ways and signs that you can tell it's going to move this way. So for one, we're looking at the volume over here. Lots and lots of volume. This bar over here goes all the way up. That means there's a lot of buyers. So that's an upward trend right here. As we can see as well, over here we're looking at the MACD. Now I don't have my regular indicator that I use on a daily basis pulled up on the chart just because I wanted to do something different. But as we can see over here, we have the MACD. It's green, meaning it's a buy, and MACD is telling us to sell over here. So you can follow the MACD if you want. However, as you can see, the MACD changes quite frequently. If you have an account less than $25,000, then it will be more difficult to day trade because you will be flagged as a day trader, and that won't allow you to trade. So the less trades you make, the better. You just have to know when to get in and when to get out. Now, like I said, this is just an indicator. It's just giving you a sign. It's not something you follow. It's just giving you a little heads up. That's besides the point. So as we can see, we've got two confirming signs. We go up. See over here where we're hitting our support levels right around here. So here's one support level, goes up, it hits another one. It doesn't break, so it continues to go up, and it breaks right around here. So this would be a good time to exit that trade. This would be the best point to exit that trade, but if not, then after the upward trend break, then that would be fine. And this is only about $1, so if you're trading options, that would probably be about $100 or so, depending on how much you're trading. If you're trading 10 options, obviously that would be more. But as we can see over here, the market just hits this line 3 times. It goes up, hits down, and it breaks right over here. So as we can see, this little box right here that it's bouncing up and down from can be referred to as either consolidation because it's staying somewhat stagnant, but it is also the resistance and the support line. So the moment the price breaks either the support or the resistance is the point where you'll buy or sell. So we can go into this into depth a little bit more. We can narrow it down or get even more technical with it, and see that over here it bounces off this 1 to 3 times, and there's a breakthrough right here. This is very, very small, but as we can see, let me make the chart a little bit larger. So if we enter in over here, 96.54, and it goes to 97, that's a small trade, but you could still make profits, and technically it is breaking the resistance level. So you can buy over here and close out of this if you were in a short or a put, because it broke this line. So anyway, let's just go over here to keep it simple, and as we can see over here, it looks like it may bounce off this again. However, it didn't. It broke past this level, so here would be a good point to sell. As we can see, we're in the red over here too, so it goes down and it does the same thing. It bounces up and down, up and down, up and down, and it doesn't break the support or the resistance level. Keep in mind that due to this break, this is a new resistance level, and this is a new support line. So the support line is the bottom, and the resistance is the top. So we can make another resistance line right over here for this upward trend. As we can see, it hits right there, there, and here's the breakthrough. So majority of the profits would be made once again right over here in the morning time. Now, it's not always like this. The market doesn't behave the same every single day. The market it's predictable, but it takes practice to understand and know the movement of the price, and that will be determined by news. It will be determined by just patterns that you might see on the chart, and indicators that might signal you that there might be a trend change, or this is where the market looks like it's heading. So, as I said, sometimes people trade with a naked chart, and a naked chart is basically no indicators at all. I don't trade like that. Some people say it's the only way to trade. Some people say that if you don't know how to trade a naked chart, then you're not a trader at all. I think that's nonsense. You can use whatever tool, instrument, indicator you want that can help you. The goal over here is to be profitable. That's it. It's to be profitable, it's to be consistent, it's to know what you're doing, it's to have the right trading psychology, when to get in, when to get out, and to be responsible with your profits, file your taxes, so on and so forth. So, with that being said, this is the video for the day, Apple, February 3rd, 2023. If you have any questions, head over to our website and we will get back to you as soon as possible.